Hey, what's going on, YouTube? Kenny here. So I had an options video kind of queued up, but today was a very choppy day for the markets, for some of the markets. If you're in tech, our tech portfolios, our investment portfolios definitely went for a ride today towards the upside. The Nasdaq definitely went up a bazillion points. That said, if you're in some of the swing trades that we were in, talking about your OIH, talking about your Fords, we got a bunch of chop. And so I'm going to talk about the markets overall and just kind of dig into it a little bit, talk about if this is actually the turn of the corner. We did talk about it on the live stream previously, but I kind of just want to keep mentioning it just in case, some of y'all have been following us and you're not so sure where we are at. So a lot of chop here, the quadruple witching coming up. And so for all those reasons, who knows what the hell is going to happen is what I'm trying to get at. Real tough to figure out the markets. But I mean, if you're looking at this this roadmap, I mean, obviously we're back to tech. Tech is going great. FANG names are going great. And on the live stream, we did change our kind of stance, our kind of thesis with the FANG names and the tech names. A lot of those headwinds became tailwinds. And so we're watching these very closely, but I don't think it's as simple as that. I think that while they are, it feels like they're fleeing for safety. I mean, if you really think about what happened, if you look at the kind of the inflows, like retail was holding the market in place, and now it looks like funds are trying to FOMO back into safety, which is, the FANG names and tech right now, it seems like. But we'll talk about all that. But again, we have some other big news, and so I want to talk about AMD and OIH specifically today. So if you didn't know, the reason why AMD kind of went on a little bit of a tear today is because basically the EU has no objections to the Xilinx merger. And, this whole Xilinx merger has been, the bane of AMD in terms of the stock price, right? There's an arbitrage situation with Xilinx and AMD. So basically there's like this synthetic thing that happens where you can basically short AMD stock and then buy more Xilinx and all this other stuff. But anyways, it's like Fugazi magic that's kind of behind the scenes that some people are taking advantage of, especially algorithms. Point is, the other thing that is happening is that the EU has basically voted and says, yes, the merger is good. And so now only China is left. The US already approved, if you're still tracking. So US approved, EU approved. Now we're looking for China to approve. If they say yes, the Xilinx merger completely goes through on all fronts. And then this can be behind us, and then the market share that AMD is taking from Intel is going to be good. Anyways, I'm not trying to state any of this stuff as like fact. A lot of this could be speculation on my part and kind of some of the things that I'm thinking about. So don't take that as like fact. I'm just kind of speculating here. But for sure, though, US checkmark, EU checkmark, China is still an unknown. And so once China busts off on this, then we should be good to go. But that's where we're at on AMD, and that's why the stock moved today. Because as we get closer to that, the arbitrage pressure goes away. Okay, so there's the AMD chart as you're looking at it. And if you didn't know, on the chat we put in an iron butterfly here. So that was the top leg, and here's the bottom leg. We busted out of our top leg here at $83. We just broke it down and sold it out. Definitely going to lose. Well, would have lost way more if we didn't break it down to 83. Probably should have broke it down a lot earlier. It went strongly over 82 for sure. But anyways, the idea here is the sky's the limits right now. Really, the next you've crossed any kind of sell pressure here, and here. People didn't sell. This is holding very, very, very strong. And that intrinsically we think that AMD will get to 99 as our first target point, and then 118 is our second target point for the end of the year. So, I mean, it's sitting at 85. It's not overvalued at all, and it's one of the last kind of semiconductor stocks to get any kind of love, especially being such a good one. And so, as it goes right now, I think, the really honestly, it could really run tomorrow. And so we do have some YOLO calls on today in our YOLO channel. But yeah, I mean, we definitely could see 90 here, and then we could start scooping up to 99, our first price target. But looking for a big run past 87, maybe to 88 tomorrow, hopefully. Looking for it, not expecting it for sure. AMD definitely hasn't been known to go down, but with this strong kind of price action and this hold, there is no weakness in this price action. So it looks good, and it's doing it with not uninterested volume, but nothing substantial. And you see this big red candle at the end of the day, and it still didn't sell off. So still holding very strong. So looking good for AMD. So if you're wondering what I think AMD, that's what I think. I think it still hits 99, 118 by the end of the year. So if you didn't load up here, you didn't load up here. Again, we're super full on AMD, but we loaded up here and here, and we're just waiting for the ride up here. We might buy some really, if the price action starts to stabilize and looks really bullish, it looks super healthy. On a pullback, we might do some short-term kind of leaps, not short-term leaps, but some short-term options to play that out and get some leverage on that. And again, I know we're starting to talk about options a lot here, and there's not a lot of coverage or a lot of explanation for options. So I'm going to do an actual beginning to advanced options kind of strategy and how we think about it here. So super beginner. I think a lot of stuff out there, especially when I was learning, it was super complicated, and I'm here to try to simplify it and dumb it down. So I'm going to go try to dumb it down as best as possible and really simplify the process so y'all can understand what we're trying to do here in terms of wealth creation. The other thing I have to talk about, though, is OIH. We're on the OIH trade. And honestly, I've drawn this yellow line because here's a line that now that we're under it is going to be a very tough line to recross. That said, do I think we're going to recross it? Yes. Everything is still in place. My thesis is still intact. Nothing has actually changed. This is just price action. This is just sentiment from what I'm seeing. And even with the Iranian kind of surplus issue, I just don't see that happening, and no evidence supports that happening. But the key thing to watch here is 225. If we get rejection off of there, we might stay around here for a while at 200, 210. But that said, I would not sell. I'm not selling any of our options. We have them until January. If you're in raw equity, yeah, just fucking stick the landing here because you got plenty of time. And we have them, again, still always till January 22. So we have plenty of time. We're still looking at July as the kind of July 30th is, for me, will have given us enough time to see travel and the coronavirus kind of subside, and some of the folks to get out and see what the transportation issues look like and how much fuel we're actually using, et cetera, et cetera, et cetera. But that said, I just want to kind of talk about my thesis really quickly again and kind of go over some thoughts from the folks in the chat, et cetera. Just kind of confirm not our bias, but confirm our thesis and just to show you what I'm looking at. So this is a Rystat kind of a due diligence article. This is an extract from it. Rystat Energy is good because they do all types of energy. It's not just oil, so they're like a very, I don't want to say very unbiased. They're an independent research firm for sure, and they are unbiased. But in terms of the energy, they have a whole macro understanding of how energy is transferring from one thing to another and how long it will take and all that other stuff. So it's not just crude oil in a vacuum, right? So that's what we're looking at. But the idea here, and we've talked about it before, but however, as the COVID-19 pandemic triggered a collapse of oil prices during the early part of the second quarter last year, E&P companies slashed investment budgets to protect cash flow. So again, so they slashed budgets, and the biggest thing that they slashed was, of course, capex. This implies COVID-19 removed 27% of planned investments. So if you look down here, pre-COVID, the projection was this, right? We would hold flat, and then we would grow or whatever. But because oil got decimated during the pandemic, and you had that zero oil and paying folks, tankers, money to hold the oil and all that stuff, we're actually down here now, right? And so if that's the case, it's just going to take a long time to, at least for the WTI side of the house, to turn on the faucets and the spigots and stuff and start producing that oil. So again, that becomes an issue when it comes to supply and demand. And again, because of the kind of hostile environment when it comes to the U.S., at least for oil companies, nothing new is going to be started. Nobody's starting an oil company at this point. So the oil companies that exist, the ones that are in the OIH ETF, are the ones that should benefit from this. And if you didn't know why we talk about this, we talk about upstream, midstream, and downstream. So OIH is essentially upstream, right? This stuff right here. It's not this, it's not this. But this stuff will make some money off of this. This will make money off of this as well. But the place that makes the most money is this stuff, right? And the reason is, if you haven't looked at, like, well, leading into this too. But that's why XLE should not move as much as OIH, right? XLE is kind of like around here, and then OIH is like here. And the deal is, if you look at lumber mills, remember the lumber price just went up like crazy, right? You know, go watch a documentary on who actually made money out of that. It wasn't Lowe's, it wasn't all this other folks, it wasn't the builders, it was literally the lumber mills itself. So that's why we're putting money into OIH, and that's where we're at. And so I just want to go through some other users in the chats talking about this. So Roberto says, it's really crazy to see OIH at 229 USD, while WTI and Brent are $70 plus. Last year, during the oil and Corona dip in February, March, April, nobody expected it to rebound as quick. I work for Total, an European energy major, and I can assure you guys that they are now printing money with these prices. Everybody did cost cutting, de-invested in expensive investments, and to the break-even point where oil price doesn't even need to be favorable for the investment, etc., to be profitable. It is literally the perception of investors that oil is old, dirty, and something to be thrown away, not for the future. When earnings will be rolling in, investors can no longer ignore this. I don't know, but I have the impression the market still think that oil price won't be 70 for long. Why would you otherwise sell oil stocks? I don't know. But yeah, I really want to thank Roberto for the comment. Love to see it. Love to hear everybody's input, especially when folks have kind of working in the industry. Again, and so here's from somebody else that I'm not going to name because I didn't get permission, but he says, Kenny, just heads up, money is only starting to flow into oil services now. When oil hits $60, we got a bunch of orders and consistent work. Otherwise, nothing major changed. Since yesterday, we started to see additional orders on top of the work we already got. Still a few weeks out, though, mid-July, August, but expect it to hold up until December. I don't expect OIH to explode, but rather to grow consistent until the end of the year. Start in a few weeks, maybe next week. I'll give confirmation later this week, start of next week. I just need to confirm the pattern. Again, only my small part of the world, Canadian and Californian oil. I don't work with customers, just the orders that land on my desk. So again, just some more insights from other folks that are working in the sector. And then if you ask me, right, I got a comment saying, you know, can we talk about the market, talk about where we're at? And so, you know, in the chat, we were looking at the 10-year, and it was rolling over really hard over here. And it didn't look like it was going to recover anytime soon. So with that said, you know, we were really looking at the FANG names as because this is the biggest tailwind for them, you know, in terms of interest rates, et cetera. But I said here on the chat, big changes in our indicators last night finally came to an inflection point, like here, right here. Here's an interesting thing. There's going to be a big update here. Plus, yesterday's CPI numbers, or the quality of the numbers, rather. Bottom line, we're upgrading FANG and tech to overweight, meaning buy the dips, downgrading financials to underweight. And this was earlier in the week. So, you know, if you were on the chat, we would have... Actually, we talked about this on the live stream Saturday too. So I mean, this is nothing new. But downgrading financials to underweight, meaning to sell financials. Yes, sell Deutsche Bank at market open for a loss. This is big for FANG. This is the Biden infrastructure bipartisan stuff that we were talking about. We had Tommy dig into a bunch of that stuff. It looks like a lot of that stuff can get through. It has legs. The most important thing here is the markets are extremely choppy this year, and we will likely course correct a few times. The key is to see indicators and not to be stubborn. And so that's kind of our roll-up on that. And if we follow up on the 10-year, you can see we definitely got a bounce here. So when we were looking at it, we were looking at here. I thought it might stay solid and do this. And I did think, in fact, it was for sure rolling over. We did get a little bit of a pullback today. But, I mean, at 1.1, you know, at the top today, it was looking rather juicy and looking ready to move. So we got to monitor this very, very closely because honestly, I mean, if I'm drawing a horizontal line, it's here. This is support. So if it does this, this is still good for tech. If it stays in this channel, this is still good for tech, right? And I'm going to tell you why. There's this idea, if you read some of the kind of literature that's out there, it's not essentially this price, but it's the rate of change. So ROC, it's the rate of change of this. So if change is steady and it goes sideways, great for growth, great for FANG, had definite tailwinds. If it goes down, wow, buy all the dips for FANG, buy all the dips for tech, right? So we got to look at this number 1.51, very, very important. If it stays in this channel, okay, FANG, tech are going to be fine. If it breaks to the upside, then it's going to go back to what we were seeing in terms of financials, in terms of, I still think energies does fine, but I'm saying all of the other commodities, et cetera, will start to kind of, kind of outperform tech. And in fact, I think we'll see a big sell-off in tech if that's the case. Yeah, so we're still monitoring this. I'm not positive what's going to happen. Future looks very uncertain at this point, especially now that it didn't do this. But the idea is we need to really, really watch this, especially because we have some ARC puts on right now to ARQ. Okay, so we're watching that, but we got plenty of time on those two, so we are not worried at all. So the idea here is, if you didn't know, the Federal Reserve increased its expectations for inflation this year to 3.4%. Basically, that's 1% higher than the forecast in March, a couple months ago. Although the committee believes inflation as pressures are mostly transitory, it brought forward the expected timeline for the next interest rate hike. So they're talking about tapering, right? And so I just want to go over this because, man, look at this. If you didn't, this looks like 2020 again, right? And this is the very first day that this has happened, really, truly, like just really mind-boggling. Everybody's running back to safety or whatever like that. So if you take this as a sign of things to come, this might happen for a couple of days. And that's why, in fact, we have a bunch of YOLO plays on a bunch of tech names today that we're riding into close tomorrow. Yeah, it looks like 2020. It smells like 2020. We will see if those rates go back down. I think this can be enduring for a little bit. Either way, play through if you're an investor. But if you're trading, if you're trying to work through things, then just get ready for chop, right? And so set up some kind of strategies that'll help you explore that and help you extract alpha out of that chop. And the final thing is, when we say things are rolling over, if you don't look at this very much, this is the futures. But really, I just want to look at, crude oil, WTI is still going up. So is Brent, that's the British and the Nordic equivalent. Anyways, the idea here, though, is besides those two commodities, these two, right, everything else looks like it's transitory. So gold is rolling over, silver rolling over, live cattle rolling over, palladium definitely rolling over, copper rolling over, platinum rolling over, lean hogs rolling over, I guess feeder cattle, I don't know. What's my point? Soybeans rolling over, rough rice, everything is rolling over except oil. So oil might be still early in the cycle, especially lumber. Lumber was a big one. Sugar rolling over, literally everything. I don't even have to go into this. Do you see what I'm saying? What's my point? My point is we don't know where we're at on this. Goldman Sachs says $80 oil, and this is the thing that hasn't run yet. So it could definitely be still a secular tailwind for oil. And so our thesis is still intact for that, especially when we see that these guys already did it and oil has not yet. So that is where we're at with the markets. Really wanted to get the options video out because I know we're doing a lot of trading on the Slack chat, and so I know we want to start upgrading to some more complex kind of strategies, but it's hard to do that when everybody else is kind of behind and I don't really have a system in place for that. So we're going to start doing an options videos along the way. So hopefully you enjoy that. If not, then just skip them, I guess. We're going to go back to doing due diligence and stuff. We're definitely digging into a bunch of that stuff. In fact, Colby has been digging down real hard on the esports ETF, and we have a bunch of companies that we're looking at. So definitely we'll present a couple of those to you and just kind of talk about our bull case on them. We do have a bunch, and so Yeah, can't wait to share some of that stuff with you. So, anyways, thanks for watching. And if you like this kind of thing, we do have a free macro newsletter. You can sign up for it at redcliffresearch.com. And we will see you tomorrow. Thanks for watching. Bye.